Welcome to the exciting world of accountancy. This subject is not just about numbers, it's about understanding the language of business. In your cgbse Class 12 journey, accountancy plays a vital role. It forms the backbone of your understanding of how businesses operate and thrive. This subject helps you understand the financial health of businesses. By learning accountancy, you gain insights into the financial statements that reveal the true performance of a company. It equips you with the skills to analyze financial data and make informed decisions. These skills are crucial whether you plan to pursue a career in finance, start your own business, or simply manage your personal finances effectively. This essay will guide you through key topics and offer practical tips to excel in your cgbse Class 12 accountancy exam. From understanding basic principles to mastering complex concepts, we've got you covered. We'll cover the essentials of partnership accounting, including how partnerships are formed, managed, and dissolved. Delving into the intricacies of partnership deeds and goodwill valuation. You'll learn how to assess the value of a business's reputation and relationships. You'll also gain insights into company accounts, understanding how companies are structured financially and how they report their financial status. Exploring the issuance and handling of shares and debentures. This includes learning about the different types of shares, how they are issued, and their impact on a company's capital structure. Furthermore, you'll learn how to decipher financial statements like a pro, understanding the balance sheet, income statement, and cash flow statement. Using ratio analysis and cash flow statements to assess a company's performance. These tools will help you evaluate profitability, liquidity, and solvency. Let's embark on this journey to conquer cgbse accountancy. With dedication and the right guidance, you'll not only excel in your exams, also build a strong foundation for your future endeavors in the world of finance and business. Partnerships form the backbone of many businesses. They are the driving force behind numerous successful ventures, providing a collaborative environment where skills, resources, and ideas are pooled together. In this section, we'll unravel the fundamentals of partnership accounting. This is a crucial area of study for anyone involved in or considering entering a partnership, as it lays the groundwork for financial transparency and mutual understanding. A partnership is a business formed when two or more individuals agree to share profits or losses. This agreement is not just a handshake, it involves detailed planning and documentation. This agreement, known as a partnership deed, outlines each partner's responsibilities, contributions, and profit-sharing ratios. It serves as the foundation of the partnership, ensuring that all parties are clear on their roles and expectations. Understanding capital accounts is crucial. These accounts track the financial contributions of each partner, which can include cash, property, or services. Each partner's capital account reflects their investment in the partnership. This is not a static figure. It changes with additional contributions, withdrawals, and the allocation of profits and losses. We'll explore how these accounts are maintained and adjusted. Proper management of capital accounts is essential for the financial health of the partnership and for maintaining trust among partners. Another key concept is goodwill, the reputation and brand value a partnership builds over time. Goodwill can significantly impact the value of the partnership and is often a critical factor during mergers or when new partners join. We'll delve into different methods to value goodwill, which is essential when a new partner joins or an existing partner leaves. Understanding these methods ensures fair treatment of all partners and helps in making informed financial decisions. Companies, unlike partnerships, are separate legal entities. This means they have their own legal rights and obligations, distinct from those of their owners. They issue shares and debentures to raise capital. Shares and debentures are essential tools for companies to gather the necessary funds for expansion and operations. Shares represent ownership in the company, while debentures are loans that the company takes. Shareholders gain a stake in the company's profits and assets, whereas debenture holders are creditors who receive regular interest payments. Understanding the issue, forfeiture, and reissue of shares is crucial. These processes ensure that the company maintains a healthy financial structure and can attract new investors. When a company issues shares, it offers ownership to investors in exchange for capital. This capital is then used to fund various business activities, from research and development to marketing and expansion. Forfeiture occurs when a shareholder fails to pay the required amount for their shares. This can happen due to financial difficulties or other reasons, leading the company to reclaim the shares. The company can then reissue these forfeited shares to new investors. Reissuing shares helps the company recover lost capital and bring in new stakeholders who are willing to invest. Debentures, as debt instruments, come with a fixed interest rate. This makes them an attractive option for investors looking for steady returns without taking on the risks associated with equity investments. We'll learn about different types of debentures and how they impact a company's financial structure. Understanding these financial instruments is key to making informed investment decisions and managing corporate finances effectively. Financial statements are like a company's report card. They provide a snapshot of its financial health. The balance sheet, the first key statement, shows a company's assets, liabilities, and equity at a specific point in time. It reveals what a company owns, owes, and the owner's stake in the business. The profit and loss statement, on the other hand, summarizes a company's revenues, costs, and profits over a period. It tells us how well the company is doing in terms of generating profits. Understanding the formats and components of these statements is essential for analysis. Section 5. Mastering ratio analysis. Ratio analysis is a powerful tool that helps us interpret financial statements. By calculating and analyzing various ratios, we can assess a company's liquidity, solvency, profitability, and efficiency. Liquidity ratios tell us about a company's ability to meet its short-term obligations. Solvency ratios indicate a company's long-term financial stability. Profitability ratios measure how effectively a company generates profits, while activity ratios, also known as efficiency ratios, reveal how efficiently a company utilizes its assets. We'll explore key ratios in each category, providing you with the tools to dissect a company's financial performance. Section 6. Understanding cash flow statements. The cash flow statement tracks the movement of cash both into and out of a company. It provides valuable insights into a company's operating, investing, and financing activities. The direct method focuses on cash received and paid directly from operations. The indirect method starts with net income and adjusts for non-cash items to arrive at the cash flow from operations. We'll break down the steps involved in preparing a cash flow statement using both methods. This knowledge will empower you to understand how a company generates and uses its cash. Section 7. Essential revision tips for success. Now that we've covered the key topics, let's focus on effective revision strategies. Practice makes perfect, especially in accountancy. Solve past cgbse Class 12 accountancy papers to familiarize yourself with the exam pattern. This will also highlight your strengths and areas that need more attention. Accountancy is best learned by doing. Pay close attention to practical questions that require calculations and analysis. Practice preparing financial statements with proper formatting, adhering to the rules and conventions. Understanding the concepts is important, but presenting your answers accurately and systematically is equally crucial. Section 8. Conclusion. Your path to accountancy mastery. As we conclude this journey through cgbse Class 12 accountancy, Remember that consistent effort and a clear understanding of concepts are your keys to success. From partnership deeds to cash flow statements, each topic builds upon the other. Practice regularly, seek clarification when needed, and approach the subject with a positive attitude. Accountancy is not merely about numbers. It's about understanding the language of business. Embrace the challenges, celebrate the victories, and embark on your path to accountancy mastery.